Hi there. Okay, great. So I finished talking about savings income. This is dividend income. So if we go to page, where are we? I believe this is page 80, right? So page 80. So let's flick through this pretty quickly. So again, I mean, I'm sure you're quite happy with what we're talking about when we talk about dividends. We're talking about if you like, a share of profit that is received from a company, and these dividends are chargeable to income tax in the year they are received. So now again, with the government trying to prevent or help people prevent and carry out non-tax evasion, evasion avoidance. They have in the FA16 Act allowed the first 5,000 at any band. So, for example, if you are a higher rate earner, a savings rate, a basic rate band person, a higher rate, whatever it is, the first 5,000 of your band is free. Of your dividends are at the nil rate band of 0. So, yeah, that's free for you. So that's pretty good. Then, the dividends fall into these brackets that we see over here. So if it falls in the first 32,000, it's a 7.5. If it falls in the sort of higher band here, it's a 32.5, and above that, it's 38.1. I think, remember, again, dividends income is taxed at the top slice of income. So in the same way when we were talking about savings income, we dealt with non-savings first. Exactly in the same way, we will deal with non-savings first, then savings, and whatever's left in that band will be taxed, if you like, at these rates, right? And we'll see an example in a second. And again, I've already highlighted here that this thing, the first 5,000 is at the nil rate band of 0. Now, the thing though is that the thing here is that once you've enjoyed this at 0, this reduces the bands now. So in a way, you can't enjoy this and then enjoy. So imagine you earned, I don't know, 32,000 a dividend. So if the first 5,000 is at 0, then you only have 27,000 left for, well, actually you're okay in this scenario. But let's look at an example just to sort of prove what I'm saying. So let's turn to page 81, sort of see what's going on here. So we have Jeremy here, who has employment income of 14,000, and he's received dividends of 7,500. I'm just going to go back to my worksheet. Okay, so what we have here is Jeremy, who has 14,000 and dividends of 7,500. If you're looking at the textbook, I've ignored the 600. We can discuss that later. I just want to focus on this idea of dividends, dividend income. So what we have here, again, is this employment income. The tables are very helpful. 14,000. I should change this. This is not savings. This is divvies. And then I have divvies of 7,500. So I have 14,000, and then I have 7,500. So I have my divvy income. And therefore, my total income becomes 21,000. So I have 14,000 here and 7,500 here. So what do? I've got my personal allowance that I can use, and that, if you like, leaves me with 3,000 here and 7,500 here. And then here I have 10,500. Of course, I'm taking up 11,000 here. So this is now my taxable income. Right, so this 3,000, as you know, nothing new. You're going to deal with it as you would at 20% because it is taxable income. This, on the other hand, so let's just sort of write it out. I'm just going to write it out clearly here. So what I would do is, first of all, I'd write 3,000 at 20%. Then I'm going to write 5,000 at 0%, because 5,000 from here can be taxed at 0%. And then, well, there's not a lot here. I mean, I'm almost sure that the other 2,500 here will be taxed at 7.5%, right? 7.5%. And that's what's really happening. And these are the, and you can, if you flick over to the next page, you can see that this 5,000 from here has enjoyed the nil rate band, and the other 2,500 will be taxed at 7.5%, which is what we do to dividend income that sits in the basic rate band. Let's do the next. Let's do the next question to sort of illustrate where I was going with that other earlier point. So what I have here is, now I have this Jacob, this gentleman called Jacob, who earns 27,900 and has dividends of 17,500. So let's just go there again, create a new spreadsheet. Actually, oops, let me just, one second, let me just change this just because. And now I can then go ahead and do this. Okay, so what do we have? So we have employment income of 27,900, and we have dividends of 17,500. So 27,900 and 17,500, and then we have total income here. Well, I'll just do that: 17,500, 27,900, and 45,400. What do I do? Knock out the personal allowance, 11,000. That's gone. And that also takes out 11,000. And therefore, I have 16,900 here, and I have 17,500 here, and this, my taxable income, is therefore 34,400. Okay, so let's do our thing. This will, all of this will get taxed at, so I'm going to do that over here. 16,900 will get taxed at 20%. Like I said, my dividend rate band of 5,000, nil rate band, can get taxed at 0%. But then, like I said, my ceiling is 32,000. So only, I must find out, well, what's the difference between, because once I get to 32,000, which is 10,100, so you see this 5,000 is eaten up into that band, is what I was trying to explain. So this gets taxed at 7.5%, and so I have a total of 32,000. Right? Now, I mean, this is equal to this 5,000 and 10,100 is still short of this, so I still have a bit more dividend to tax, and that's now 2,400, which is the difference between these two and the 17,500. So I tax this at 32.5%. So work all these out, and that becomes your taxable, your income tax liability for Jacob. Yeah, cool, great stuff. So so that's savings and that's dividends income. I will, in my email, I'll put some questions for you to practice in preparation for Friday. Great stuff. Thank you. See you then.